This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping on November 27th, 2015. Our time is 8:38 Mountain. This is the Grey Cup pregame show edition. We are on from 1 until 2 today. Normally our radio show runs on CHED, 3 until 4. We're on 1 until 2, and then the Eskimos pregame show. 2 until 4, the big game at 4, Eskimos, Ottawa, and the Grey Cup in Winnipeg. And it's been 10 long years since we were there and won. Good luck to our Edmonton Eskimos today. We know you are going to win. David Morley will have the pregame show right after our show. Don't forget, if you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. Connect with Harold at 1-800-432-1022, 1-800-432-1022, the website rarecoloreddiamonds.com. Our featured diamond of the week, and this is a beauty, a .76 carat, hard-cut, fancy, intense pink argyle. We'll talk more about the Argyle mine in the second half of the show and have diamond news for you. But what a beautiful diamond. See it now. Featured diamond of the week, rarecoloreddiamonds.com. Today is Black Friday in the United States. They had U.S. Thanksgiving yesterday, and if you listen to our radio show via our podcast on iTunes, you can see us there. All you need to do is type in the World Financial Report on radio. We're there. We're portable. We go on any of your devices. We have people that listen to our radio show all around the world, including the United States. So happy Thanksgiving to those listening in the U.S. The market is only going to be open for 3.5 hours in the United States today due to the Black Friday. It's almost getting to be like a holiday. We have Boxing Day. They have Black Friday. Now, as we tape today's show and we get to Harold's commentary momentarily, we wanted to let you know, and this is a little bit of a tribute to Richard Russell. He was the publisher of the Dow Theory Letters. We've talked about him many times on our program. He passed away last Saturday at the age of 91. And he was a person who specialized in technical analysis. And he had subscribers through his influential Dow Theory Letters since 1958. He continued to give commentary until the middle of November, and he passed away on November 21st at his home in California. He will be greatly missed. And one of the last things he said to his subscribers, the end of capitalism will be due to the unbelievable amount of debt that is currently being created. This will create monster inflation that will destroy every currency. The only currency that cannot be destroyed is gold. And he goes on to say, when investors realize this, we'll be making and marking one of the greatest bull markets in gold ever. A final warning and thoughts from Richard Russell, who passed away during the week at the age of 91. And obviously, Harold, it's so important now with Richard Russell leaving us that we have Harold Siegel, because we need your knowledge. We're losing a lot of top experts. You're still very, very young. You're good for another 40 years, I figure.
Well, thank you.
You'll live to 100 or beyond. Knowing Harold, he'll live to 100 for sure. But we need your knowledge now more than ever, now that Richard Russell has passed away. And as we tape today's show, gold down to a 6-year low, and the U.S. dollar above par, Canadian dollar around 74.83. All of your predictions are coming in, but we still advocate for hard assets in the current economic times and geopolitical times that we live in today.
You bet. And it's a great loss to lose Richard Russell. He was a great man and certainly helped an awful lot of people. So, again, he's had a great life, lived till 91 years old. Markets are thinly traded on, Thursday the markets were closed for American Thanksgiving, and Friday the markets are very thinly traded. However, the trend in the market still continues. We're probably one of the only analysts that were calling for gold to drop to 1,000, but gold is at 1,050, so it's getting fairly close. There is minor support in the gold market at 1,050. 1,035, 1,025, with major support at 1,000. And then the strongest support, believe it or not, is 850. So why is gold dropping with all the geopolitical situations around the world with ISIS and the threats and everything going on and all the problems in Europe financially? The reason for gold going down is because the U.S. dollar is strengthening. So the fact is that the stronger the U.S. dollar gets, the weaker gold gets. It's always been that way. In actual fact, back in the 90s, when the U.S. dollar was the strongest currency, U.S. Gold was down to $250. So again, there is a direct correlation between the gold market and the U.S. dollar. And again, as the U.S. dollar strengthens, we do anticipate that the gold market will fall further. Now, how far do we think this market is going to go? Well, now that we've broken par in the U.S. dollar, I need to see 2 closes above par in order for this market to confirm that it's going to go higher. But there's no way that the U.S. dollar is not going to at least 107, 108, maybe 110, which is still about 10% higher than where the market is right now. So when we say that the market is above par, there's only a couple currencies that actually are stronger or have more value than the U.S. dollar. The strongest being the British pound. Then comes the euro. Then is the Swiss franc. But now that the U.S. dollar has broken par, and the euro is at 105, and the U.S. dollar is at 1, so we're only 5 cents away from the U.S. dollar and the euro being equal, which will be the first time that has ever happened. In actual fact, there's been a point where the euro's traded above 160, and the U.S. dollar's traded down to 72.5 cents, and that was back in 2011 when gold hit $1,920. That was because of the weakness in the U.S. dollar at that point. The U.S. dollar was down to 72 cents. So now we're looking at a situation from 2011 to 2015, almost 2016. Over those 4 years, we have seen that the price of gold has gone from its absolute high of $1,920, and it's come all the way down to $1,050, so it's lost almost $900, almost 50% of its value, and all of that is primarily to do with the fact that the U.S. dollar has gone from 72.5 cents all the way up to par. So it's gone up 28 cents, and that 28-cent increase in the price of the U.S. dollar has made gold fall $900. That's the direct correlation between gold and the U.S. dollar. So no matter what happens, we are going to see the U.S. dollar continue to strengthen and gold continue to fall until the U.S. dollar tops out at about 108 to 110. The only thing that will stop that market from doing that, and the only thing that I see happening that could stop it, would be if ISIS makes good on their threats and attacks New York or Washington. Then at that point, you'll see the U.S. stock market plummet by thousands of points. You'll see the U.S. dollar plummet, and you'll see gold go up hundreds of dollars. This is why we say don't trade gold and silver. Own gold and silver. Own gold and silver as a hedge against everything bad that is coming our way. At this particular point, there are certain currencies and economies around the world that are doing terrible, with Canada being one of them. And please don't take this the wrong way. I'm very proud to be Canadian, but the facts are the facts. The lower oil goes, the lower the Canadian dollar is going to go. And at this particular point, a lot of people feel that we're close to the bottom of oil. I just don't see that as a possibility, because at the beginning of 2016 is when Iran gets to start pumping oil again. Don't forget, Iran has had sanctions against them for the last few years, so their oil has been off the market. And they've been destitute financially. Their currency has gone to almost zero. When you talk about inflation, Iran and Venezuelans' inflation rates are through the roof. It costs over $200 to buy a loaf of bread in those countries. So the fact is that when Iran starts to pump oil again in 2016, even though it's a highly saturated oil market, there's a lot of oil on the market right now, and the prices are very low, they're going to continue to pump oil because they need the money desperately. You're going to see Russia do the same thing. So my prediction is that the price of oil is going to come down to around the 30 $2 range to the high 20 range, depends on how much oil they actually pump. So the fact is, as there's a direct correlation between the U.S. dollar and gold, the stronger the U.S. dollar, the weaker gold. A similar scenario happens with the Canadian dollar and oil. The lower the oil market goes, the lower the Canadian dollar goes. And because we do anticipate that the price of oil is going to fall substantially lower, possibly $10 lower than where it is now, we're saying that you should make some major adjustments to your portfolio. First of all, if you're sitting in paper assets, mostly paper stocks, paper money, that type of thing, the Canadian dollar is going to continue to fall and the American dollar is going to continue to rise. There are trades and there are investments available through my company that you will do tremendously well in. You've got to get out of Canadian dollars at this point and get into American-based investments, but not stocks or mutual funds. So the fact is that I'm available for any of the listeners on our radio show to call me. I'll discuss your financial situation, how you're sitting, where you're weighted, and how you should be looking into this market coming forward. Because if you're sitting in stocks and paper assets moving forward with this type of an economy, you're going to lose all your money. There is no doubt that the stock markets are going to fall substantially, and there's no doubt that you're going to see major changes in currencies. And those are the type of investments that I make for my clients that are safe and extremely profitable. So if you're not doing well in the markets, if your retirement savings plans are doing poorly, and let's face it, they have to be, nobody's made money in retirement savings plans in the last decade. So if you're not doing well and you're concerned about what's upcoming, and believe me, there's some serious situations happening in the currency markets, in the paper asset markets, and in the gold market that you need to know about. And again, I'm available to speak to any of our listeners for as long as it takes so you understand what your opportunities are. We do have amazing investments available for our listeners, our Canadian clients, that are American-based, that will not only make you money on the currency, but make you money on the actual investment. So if you're not doing well in the markets at this point and you are concerned, please give me a call and I'll spend as much time with you as you need to help you understand what your options are and how you can make money in this very risky and very confusing marketplace.
RareColoredDiamonds.com. That's Harold's website. You can connect with him there. The telephone number, 1-800-432-1022. 1-800-432-1022. The featured diamond of the week from RareColoredDiamonds.com, and this is an absolute beauty. When you see the picture online, you can see it in our free weekly newsletter as well. This week's diamond is a .76 carat hard-cut fancy intense pink argyle. See it at RareColoredDiamonds.com, featured diamond of the week. We'll talk about why argyle diamonds are such a great investment, diamonds in general, in the second half of today's program. But connect with Harold, get our free weekly newsletter, take him up on his generous offer of speaking with you personally and privately. The call is 100% free, and obviously the call is confidential. 1-800-432-1022 or RareColoredDiamonds.com. One of the things that we've spoken about in past shows, and Harold is currently working on doing a seminar that you would be invited to on a cashless society. He does have a special report. If you would like to get the special report on what a cashless society could look like, speak with Harold, 1-800-432-1022 or RareColoredDiamonds.com. And he's putting together a seminar, and we have a little more information for you and him for this seminar. It's interesting to note that a Swiss bank is about to charge customers a negative interest rate. A tiny Swiss bank specializing in financial, and this is social and environmental projects, is going to, as of January 1st, 2016, go where no retailer has gone before, applying negative interest rates on individual clients. The alternative bank Suisse, ABS, caused shockwaves with a letter sent to all clients in mid-October informing them that it would be imposing interest charge on deposits in 2016 for all current accounts. The bank said it would impose a negative 0.125 percentage rate, while slapping a 0.75 percentage rate on client deposits over 100,000 Swiss francs. So for individual depositors that have been shielded from the burn of decisions by central banks, including Switzerland's, this is about to change. They're going to be introducing negative interest rates, and they do it to light a flame under growth or ward off unwanted currency investors. And we have articles about that in our free weekly newsletter. If you'd like to learn more, speak personally and privately with Harold about negative interest rates, also about a cashless society, connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. And it's interesting to note that there are two different plans. Switzerland, they are sort of pro-money, where Sweden is anti-money. And it's we talked about this on a past show. If you use too much money in Sweden, banks call the police because they think you might be a terrorist or a criminal. Now, in Switzerland, they're taking a different attack, and they're going the negative route, charging people to have bank deposits. But it's interesting to note, and this is the interesting part, that conservative war on cash theorists do believe that banks want to abolish cash in order to end financial privacy and force everyone into the banking system for all electronic transactions. Those banks can then change the value of cash at any time they want, thus making fiat currency even more of a sham than it already is, according to these voices. And they go on to say that the best thing to do is have hard assets as a result. We had a story in a past newsletter. I did put it in this free weekly newsletter as well as a reminder. People are hiding cash in their microwaves in Sweden as they move towards a cashless society. So, Harold, it's a very crazy, chaotic time, not only geopolitically, as we saw with the Paris terrorist attacks and other attacks around the world, but here we are, negative interest rates. You're being charged to have a bank account, and then on top of it, going to a cashless society, trying to get people to spend money. It's a very strange wave that's happening over in Europe, and I know a lot of people think that it won't happen in North America, and yet the truth of the matter is we don't know, and people should have that hard asset that we talk about, diamonds, gold, and silver, in their portfolio at all times to prevent against something like this.
You bet. And if you don't think it's going to happen here in North America, you're 100% wrong, because it is almost here already. Only 7% of transactions are done in cash. So I don't want to give too much away, because it's going to be a tremendous seminar, something that everybody has to attend, and you'll be able to do it virtually. I'll be doing it from my offices in Florida, but you'll be able to attend it from anywhere in the world on your iPhone, your iPad, or your personal computer. And again, we'll be doing that in the first quarter of next year as we gain more and more information. But believe me, things are changing, and you've got to be up on it. Otherwise, you're going to be the same as everybody else, caught up in a situation that you didn't know was coming, and the repercussions can be almost insurmountable. So again, I'm looking forward to bringing you that information within the first quarter of the new year, but it's vital that you attend this, and we'll certainly let everybody know. But again, the cashless society is coming, and it's going to be a lot faster than most people ever thought. So again, there are things that you can do to prevent those type of situations happening. And as far as negative interest rates go, how crazy is that? That again, you put your money into the bank, you're not making any money because the interest rates are at times below 1%. And the fact is that most of this stemmed from what happened a couple of years in Cyprus, when the Cyprus bank closed down and stole everybody's money, just to see what the repercussions were going to be, and there was hardly any repercussions. So I hate the way the banking system is going, and it's going to affect all of us. And again, I will keep you updated when we do this seminar. It's something that you definitely need to attend.
Speak with Harold personally and privately, 1-800-432-1022, rarecoloreddiamonds.com. Our featured diamond of the week is a 0.76 carat, hard-cut, fancy, intense pink argyle. Take a look at this diamond at rarecoloreddiamonds.com, rarecoloreddiamonds.com. And it was interesting to note, and these tied together. 60 Minutes did a feature last Sunday on the future of money. and they have what they call mobile money. A revolution has taken hold in Kenya, where people can send and receive money on their cell phones. It's improved commerce and brought basic necessities to poorer areas. Tech giants like Google, Facebook, and PayPal are all steadily rolling out newfangled services to turn smartphones into digital wallets, replacing cash and checks. And it's been reported that Apple is working on a new payment option to let iPhone users use and actually send money directly to one another as easily as sending a text message. Now, this system, the mobile money system, has been used in other countries, not successfully so far, but it is a huge hit in Kenya. And one of the things they touched on in the story is that the banking lobby is very strongly against this. No surprise there that the banking lobby would be against having a situation where they would be taken out of the picture. And one of the things that happened this week, and we have the story in our free weekly newsletter, ex-Barclays CEO says banks are about to have an Uber moment. We know how Uber has disrupted the taxi industry. He says it's going to be painful. Anthony Jenkins, the former CEO of Barclays, has a nightmare vision for the future of big banks. In a speech in London during the week, he says, the incumbent risks become merely capital-providing utilities that operate in highly regulated, less profitable environments, a situation unlikely to be tolerated by shareholders. And he goes on to say, a series of Uber-style disruptions in the industry could shrink headcount at big traditional banks by as much as 50%, with profitability in some areas collapsing by over 60%. In fact, he goes on to say, in my view, only a few incumbent banks will have the courage and decisiveness to win in this new field. We will see massive pressure on incumbent banks, which will struggle to implement new technologies at the same pace of their rivals. That will make it increasingly challenging for them to deliver the returns and profitability to their shareholders. Ultimately, those forces will compel large banks to significantly automate their business. And I predict the number of branches and people employed in the financial services sector may decline by as much as 50% over the next 10 years. And even in a less harsh scenario, I expect a decline of at least 20%. And halving of headcount and branches over 10 years, it's going to be a huge decline. So here you have in Kenya a system that they're using, mobile money, and now you have possibly an Uber moment when it comes to the banking industry, as the former CEO of Barclays is very concerned about. Negative interest rates, and then cashless society. It's a very interesting time. And if you want to position yourself today to be in the right circumstances for tomorrow, speak personally and privately with Harold Siegel. He'll be more than happy to offer you investments to take advantage of what will be happening in the future. Connect with him. 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. We're going to come back and talk about diamonds in detail as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November 27, 2015. Our time is 9:03 in the morning Mountain. Our radio show runs normally on 6:30 CHED, Sunday afternoon at 3. We are on today before the Edmonton Eskimo Grey Cup pregame show with Dave and Morley. Eskimos, Ottawa, 2 p.m. pregame show. Game time a little after 4. The Eskimos playing Ottawa in Winnipeg. Good luck to our Edmonton Eskimos. Have not been in the Grey Cup and won it in 10 years. It's been a long time. We are due, and positive thoughts go out to our green and gold. I know that we will definitely win today. If you ever miss a radio show, don't forget the shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We also have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We're portable. We go on any device you do. And obviously, around the world, you can listen to us. In fact, we say Happy U.S. Thanksgiving yesterday to our American friends. It's Black Friday as we tape on Friday. in North America. I know a lot of people in Edmonton taking advantage of the sales over the weekend. Now, today, the market, financial markets on a Friday, Black Friday in the States, are only open for 3.5 hours. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or 1-800-432-1022 for our featured diamond of the week. And this is a beauty. If you think about starting a diamond portfolio or even gifting for Christmas, a diamond or a diamond ring, this is the diamond for you, a 0.76 carat heart-shaped, and this is a heart-cut, fancy, intense pink argyle. See the diamond at rarecoloreddiamonds.com, featured diamond of the week. And Harold, it is absolutely gorgeous. And we'll talk momentarily about the Argyle mine and their tender that we spoke about a few weeks ago that we have information on now. But what a beautiful featured diamond this is.
It is, and it's an amazing investment diamond, too. First of all, 95% of all diamonds that come out of the Argyle mine, as far as the pink diamonds go, are small. They're under 1/4 carat. This one is 3 times that size. So in this particular case, size is very important. On top of that, it's an Argyle pink. It means that 95% of the pink diamonds that come into the world come from the Argyle mine. That mine is going to close before 2020, which is only 4 years from now. We're talking about one of the best investments you could make because there will not be any more pink diamonds. And the price of these pink diamonds can go through the roof. They can go up 500, 1,000% from where prices are right now. And the fact is that it's also an asset that could be sold in other currencies. So it's one of the most important investments that you could make. The Argyle mine is getting ready to close. Very seldom will you see a diamond this size and quality and color come out of that mine, but it is available for sale, and it's one of the best investment diamonds that you could possibly buy. You know, when you look at what's happening at Christie's and Sotheby's, for example, and you see these massive diamonds selling for $25, $50 million, you know, most people in the world can't come close to making an investment like that. But you don't need to invest that type of money in order to make money in the rare diamond market. In fact, diamonds like yellow flawless diamonds, for example, a fancy yellow internally flawless diamond over 1 carat is worth about $20,000. They go up by about 15% a year. Well, there's no way that the Dow Jones goes up 15% a year. There's no way that most of your investments will go up 15% a year, but these diamonds do, and they've been doing it forever. Back in 1980, you could have bought a 1 carat fancy yellow flawless diamond for about $500, and today they're about $20,000. 50 years ago, my wife's girlfriend's grandmother bought a 5 carat pink diamond for $50,000. Today that diamond is worth $5 million. So it's an alternative investment. It's different than owning stocks or bonds or real estate, even though Europeans call diamonds real estate in your pocket. You could literally walk around with millions of dollars in a diamond and nobody would even know it. So it's that type of asset, and realizing the type of world that we live in today with the potential of negative interest rates and a cashless society and all the things that are going on, all the risk and all the geopolitical situations with ISIS and the massive inflation that's going on in Venezuela, where a large McDonald's French fry sells for $125, this is the type of world we live in. If you stay in your conventional investments, you're not going to do well. Stocks will not do well in this kind of environment. Gold will do well over the longer term. We anticipate the gold prices are still falling, but there's going to be a point within the foreseeable near future that gold's going to go to $4,000 to $5,000. So obviously, if we can buy gold at around $1,000, we're going to do extremely well as a hedge against massive inflation that is coming our way. So the fact is, there's very few investments that will do well in this type of an economy. Number one, gold will do very well moving forward. There's shortages in the gold market. Gold's been trashed over the last 3 or 4 years, and the fact is that gold is getting ready to make another major run, and we'll certainly let you know when we see that happening. Similar with silver. On top of that, certain diamonds are doing tremendously well. Just look at what's happening at auction, and you'll see how the prices are going. They're going straight up. These are assets that do not lose their value. You know, when you look at investments, we all want to make money, but the most important thing is to protect your principal. And that's what diamonds do. Diamonds will never go to zero, never will gold. But the fact is that certain diamonds will never, ever decline in value either. So going into a diamond, for example, investment with rare colored diamonds in pink diamonds from Argyle, you're looking at diamonds that will never fall in price because soon you're never going to be able to get another pink diamond. And Economics 101 certainly tells you that when the demand for a commodity is high and the supplies are low, the prices go higher. So that's why we're so excited about the diamond market. And now realizing what's happening at auction, we're seeing unbelievable prices come out of diamonds at auction. We also own our own auction business, and going into the new year, we're planning on having several virtual auctions in diamonds and other collectible alternative asset investments that you'll be able to make. We're also going to be doing a seminar, a virtual seminar, in the first quarter of 2016 on the cashless society and how that's going to affect you, and that's definitely something that you want to attend. So again, we've been able to pick trends. We've been very successful at picking markets that have done extremely well for our clients. We're a very conservative company. We don't take unnecessary risk. We don't leverage anything that we do. In fact, we shy away from leverage and financing any metals or anything like that. But we do have certain investments right now that are very conservative. They're based in U.S. dollars, which will make you a lot of money on the currency, and are very profitable. They're not mainstream. They're not trading stocks or mutual funds, which we shy away from. I haven't traded stocks since 1999. There's way better ways to make money. And again, I've traded currencies, oil, commodities for half of my life. And again, I have something for my Canadian clients that they've been doing extremely well with that we'd like to introduce to our new listeners. So again, if you're not doing well in the markets and all of your money is sitting in Canadian dollars and in paper assets, you need to give us a call. We can help you not only preserve your capital, but make a lot of money over the next few years in these markets.
Speak with Harold personally and privately. The call is free. The call, obviously, what you say is confidential. 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. Our featured diamond of the week is a .76 carat hard-cut fancy intense pink Argyle. And we have some news from the Argyle mine, and it's exciting for those that are thinking about investing or already invested. The Argyle mine, that's where 90 to 95% of the world's pink diamonds come from. That mine is going to be shutting down in approximately 2020, not far away, about 4 years. The world's most expensive diamonds have all been sold. A collection of 65 rare pink and red diamonds from the Argyle mine in the northwest corner of Australia have been sold in their annual global tender. The Argyle Pink Diamonds tender, known as the Connoisseur's Collection, weighing a total of 44.14 carats and including 4 what are known as fancy red diamonds, went to bidders from 11 countries. Rio Tinto, the owner of Argyle, doesn't reveal what the tender winners paid for their diamonds. However, pink diamonds can fetch 50 times more than the common whites. They often get $1 million a carat. Now, based on the 2015 Argyle collection, which would have brought in more than $40 million, the most expensive pink diamond sold was the Graph Pink, a 24.78 carat fancy intense pink diamond sold at Sotheby's in 2010 for $46 million US. Josephine Johnson, the Argyle Pink Diamonds manager, says she is delighted with this year's result, saying that the 2015 Argyle Pink Diamonds tender achieved the highest price per carat since the tender began in 1984. The 5 heroes of the collection were sold to notable investors, collectors, and retailers based in Europe, United States, China, and the Middle East. The most valuable diamond was lot number 1, called Argyle Prima, and that was a 1.20 carat fancy red pear-shaped diamond, which went to Science Diamond Management. Almost the entire world supply of rare pink and red diamonds come from Rio Tinto and their Argyle diamond mine in the East Kimberley region of Western Australia. And keep in mind that that mine will shut down in approximately 4 years. One of the other stories that came out this week, Harold Christie's found out that there was a rare 25-carat pink diamond found among Imelda Marcos' collection. And it was a rare barrel-shaped pink diamond that was found in her jewelry collection. The former Philippine First Lady Imelda Marcos, and Christie's is actually working with the Philippine government to auction off that at some point. And we can't forget a few weeks ago at auction in Geneva, Christie's and Sotheby's had some really nice diamonds that went. There was a pink diamond that went for $28.5 million. There was a blue diamond that went for $48.5 million. Both went to a billionaire from China and were given to his daughter Josephine as a gift and renamed for her as well. Harold, it's just a really exciting time for rare colored diamonds. All the news that's coming out and the fact that we have an opportunity to get a featured diamond like our rare Argyle today, and you know the mine is going to be shutting down in 4 years. The tender every year comes out, and there's only a handful of diamonds for the entire world. It's the rarest of the rare, and definitely an elite investment.
Oh, you bet. You bet. It's such an amazing, amazing mine. And again, the reason it's closing is that it's saturated. It's just not producing anymore. It was discovered all the way back in the 80s. It was the largest producing diamond mine in the world, producing 30 million carats of diamonds a year. But most of those 30 million carats of diamonds, were low-grade industrial white diamonds that are used to cut other diamonds. You can only cut a diamond with another diamond. But out of all those 30 million carats of diamonds comes a handful of these amazing pink diamonds. In fact, if you take the whole year's supply of pink diamonds from the Argyle mine, they won't even fill a champagne glass. That's how small the collection is. But they are the most amazing diamonds you can ever see. And investment-wise, again, they are investments that will never, ever be able to get again. Because once this mine closes, that's it. There is no other mines in existence that does what the Argyle mine does. So we're ecstatic to be able to bring these type of diamonds to our clients. And we have diamonds that start in the 50,000 range that are Argyle pinks that in 10 years from now could be worth 500,000. There's no investments around today that will do what the Argyle diamonds will do. And we'll never, ever get another opportunity to ever do this again because there is no mine in existence that does what the Argyle mine does, which is produces 95% of any particular diamond. So these diamonds can be 50 times or more what the price of a white diamond is. So we're ecstatic to bring these diamonds to our clients. And again, investment-wise, they will outperform anything that you're doing. No stock will come close to performing as well as owning an Argyle pink diamond. And the featured diamond is 3/4 of a carat. I mean, they barely exist anymore. 95% of the Argyle pinks are under a 1/4 carat. So you're talking a diamond that's 3 times the size of 95% of the diamonds that come out of that mine. So it's certainly got that going for it. The fact that it's a fancy, intense pink makes it ridiculously rare because it's very heavily saturated in color. And then the heart shape, how many heart-shaped diamonds do you see? They are absolutely the most gorgeous diamonds. And the fact is, when you put it into a necklace or into a ring, it could gain even more value. It is stunning. And anybody who ends up with this diamond is going to end up with one of the best investment diamonds that you could ever own. So, again, we're just ecstatic, Randy, with everything that's happening in the diamond market. And not only does my company, Rare Colored Diamonds, bring to you some of the most amazing diamonds in the world, we have diamonds that start at 20,000, and we have diamonds that go to 40 to 50 million. So we can certainly handle anything that our clients need in the diamond market. But the majority of our clients invest in diamonds that are under $250,000. We sell many diamonds that are in the 20 to 100,000 range that go up by 15, 20% a year. So again, this is what we bring to you, and we also are the only company that created the secondary market that resells the diamonds. We own a company called H Siegel Fine Auctions, which is a virtual live auction that will sell our clients diamonds when the time is right to do so. We will start to hold auctions again in the new year, and again, we plan on bringing many virtual auctions that you can attend from your personal computer, your iPhone, or your iPad, no matter where you are in the world. It'll be one of the great investments. And again, we're going to bring to you alternative investments. No stocks or bonds, but physical gold, physical diamonds, physical classic cars, the most amazing investments that you could ever invest in, and you'll be able to do it through H. Siegel Fine Auction.
You're listening to the World Financial Report on radio with Harold Siegel and me, Randy Marshall. And we're on today at an earlier time. Normally we're on from 3 until 4 today, 1 until 2. We're so excited that our Edmonton Eskimos, after a long 10 years, I remember watching the Eskimos win the Grey Cup in 2005 in BC. They played Montreal, won in double overtime. And that was the last time we won, the last time we were there. Eskimos and the Ottawa Red Blacks coming up at pre-game show with David Morley coming up at 2 o'clock. And the game will be on shortly after 4. Good luck to our Edmonton Eskimos. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Take him up on his generous offer to speak personally and privately about some of the different opportunities that are available to you to invest in the world today when you have chaotic geopolitical trouble, similar to, obviously, we had the terrorist attacks, and then we had Russia. One of their jets was shot down by Turkey, and people were very concerned. That's the world we live in, terrorist attacks and planes being shot down in different war zones, and you need to have a hard asset component to your portfolio as an insurance policy to protect yourself. Our featured diamond is a 0.76 carat, hard-cut, fancy, intense pink argyle. See it at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. Harold was mentioning on the last show that his company, rarecoloreddiamonds.com, has a big, rough, white diamond. And that sort of dovetails into the story that we touched on last week, and it carries forward to this week. How much does the head of Lucara, the CEO, that unearthed the second biggest ever diamond want for the gem? They want more than $60 million. That's all he'll say. I haven't even told my wife, says William Lamb, CEO of Lucara Diamonds, which is out of Vancouver, which last week announced the discovery of a 1,111 carat gem quality diamond. It's higher than the current estimates that people are putting out there. We are north of $60 million. The discovery sent shockwaves through the $80 billion diamond industry. The type 2A stone, just smaller than a tennis ball, is the biggest on Earth since the 3,106 carat Cullinan gem found in South Africa in 1905. It was cut into pieces, which are set in the crown jewels of Britain. Exceptionally large rough diamonds can sell for about $60,000 a carat, though Mr. Lamb hopes that its status will boost its value. The first Lucara worker to touch the stone was at the time the only person still alive who handled a $1,000 or 1,000 carat diamond, he said. A lot of people will use this as a basis, $60,000 a carat. On top of that, you have to look at the size of the final polished diamond as well as the historical context that's going to play into it. But Harold, interesting, this company has found this massive diamond. They're looking to possibly sell it for $60 million. They were already offered $40 million and turned it down. I know your company has a big, massive, rough white diamond as well. There's a lot of planning that goes into deciding what the cut's going to be to show the best brilliance and the light, and that takes a lot of time, doesn't it?
You better believe it. A diamond like that could take a year or two just to plan to cut it. So this 1,100 carat diamond, being a type 2A, makes it extremely rare because it means that there's lack of nitrogen, which means that it makes it even clearer. So not only is the diamond massive, but obviously of extremely strong quality. And again, large white diamonds, large rough white diamonds are an extreme commodity. And again, when you look at the difference between buying it as a rough and then cutting and polishing it, the difference you can now see, because at $60,000 a carat that they would try to sell it as a rough, once that's cut and polished, it would jump to $200,000 to $300,000 a carat, because a diamond that's D-flawless and type 2A and excellent in cut, symmetry, and polish, if it's cut as a round brilliant, could go for $300,000 a carat. So that's the difference between the money that's made by pulling a diamond as a rough diamond out of the ground and then being able to cut and polish it. So, again, that's an amazing, amazing situation, and I love that aspect of the business. The rough diamond aspect of the business is really what the diamond business is all about, and again, I just find it fascinating, and that is one tremendous diamond.
Our featured diamond of the week, speaking of tremendous diamonds, even if it's something that obviously you don't think you could invest in or whatever, take a look at it just for your own knowledge, because this is one of the most beautiful diamonds we have featured on our show. RareColoredDiamonds.com, featured diamond of the week, a 0.76 carat, hard-cut, fancy, intense pink argyle. See video of the diamond there as well. See a picture. And this heart-shaped pink diamond is absolutely gorgeous. Harold, we have approximately 4 minutes left in our program here today. And, of course, the Edmonton Eskimos pregame show is coming up. Eskimos in Ottawa in the Grey Cup. Morley and Dave with the pregame show coming up at 2 o'clock. And we wish our Edmonton Eskimos, obviously, all the very best. In the United States, of course, they raised the debt ceiling. In fact, the U.S. national debt has spiked $578 billion in 3 weeks. And under Barack Obama, the president of the United States, the debt is up $8 trillion. That's right, $8 trillion. They have a debt of around 18.7. They think that it could go all the way up to 20 or 21. That now equals about $159,007 per household, and an increase, and it increased approximately $68,756 per household during Obama's presidency. So you're looking at absolutely staggering numbers, the amount that the United States is in debt. And we pay tribute again to Richard Russell. Of course, Richard Russell, the writer of the Dow Theory Letters, he passed away at the age of 91 on November 21st at his home in California. And one of the things he said, one of the last things he said to his subscribers, and he said, the end of capitalism will be due to the unbelievable amount of debt that is currently being created. This will create monster inflation that will destroy every currency. The only currency that cannot be destroyed is gold. When investors realize this, we'll have the makings of the greatest bull market in gold ever seen. That, according to the late Richard Russell, 91 years old, who wrote the Dow Theory Letters since 1958, highly respected. And Harold, I can tell you that I strongly agree with him. With about a minute and a half left, give us a rundown on your final thoughts.
Right. First of all, Richard Russell, again, worked until he died. I love that about him. He really cared about everybody that was his subscribers and friends. So, again, he's 100% right. We're in a very, very dangerous world right now. For most of us out there, these things have never been seen before. They're confusing. They're dangerous. We work so hard to support our families and to hopefully one day be able to retire. And with the way things are right now, that isn't possible for most people. So again, I think we have a firm handle as to what's going on and what is going to happen moving forward. I'm offering any of our listeners to our show, just give me a call. Doesn't matter how much money you have or what. If we can help you, we want to help you get out of Canadian investments, Canadian dollar investments, and get you into some lucrative investments that will do much better for you over the short and the longer term. So again, these are very dangerous, confusing times. Our radio show has been on for 15 years now. We don't charge for our newsletter, for the radio show, for seminars, or anything. We're here to help, and we want to make certain that our Canadian clients have the information they need to make an intelligent business decision.
Thank you very much, Harold Siegel, for your knowledge and another great show.
My pleasure. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold personally, privately. RareColoredDiamonds.com or call 1-800-432-1022. Featured Diamond of the Week, a 0.76 carat, hard-cut, fancy, intense pink argyle. See it at RareColoredDiamonds.com. Good luck to our Edmonton Eskimos against the Ottawa Red Blacks. The pregame show with David Morley is coming up after the news. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. Go Eskimos. We will talk to you next weekend.